Welcome back to my live trading series. This is video 2, and as promised, I'm here to share everything good, bad, and ugly. My bull put spreads portfolio has hit some turbulence with a couple of positions in repair mode as I work to prevent losses or assignment. I've closed out GLD and QQQ for now, and my focus is on rolling IWM and SPY out of the money. I'm Patricia Saylor, Managing Partner of Saylor Financial Fundamentals, coming to you this evening straight from the swimming pool to my comfy recliner, not feeling like going out to my shed studio, but just wanting to get this video complete and uploaded for you. I've been upfront from the start. These are hard trades to manage. Time will tell whether my trade management strategies make me look brilliant or serve as a cautionary tale for you. Either way, you're about to get a front row seat to the real challenges of managing these positions. I have promised you total transparency, and this is the ugliest this account has been since I opened it. So let me show you what's going on today. The IWM position went in the money, and I was afraid I was going to be assigned. I had increased it from a $300 spread to a $700 spread to try to get it out of the money. And I was worried that I was going to be assigned anyway. So I rolled it out from January 10th to January 24th. I rolled it out 14 days. I didn't increase the spread, but I doubled my number of contracts. My new position on IWM was a 217, 210 spread times 2. And that rolled it just barely out of the money. If you see, IWM now is down to 216.63. So this $217 put is in the money, but I do have 11 more days to expiration, so I'm leaving it alone and hoping the share price is going to recover. I'll deal with it later if I need to. Which brings us to SPY. So I've been trying to work my strike prices down with SPY, and this morning the share price was below 580. It was like 578, and I had 2 positions in the money. So this is what I did. I had a $500 spread with strike prices of 580 and 575 that was going to expire in a couple of days. And I was really afraid this share price might not recover fast enough to prevent me from being assigned or taking a big loss on it. So I rolled this $500 spread out to January 21st. And today is Monday, January 13th. So I rolled it out 8 days. And you'll see I increased my capital at risk from $500 to $600. And instead of increasing the spread from 500 to 600, I decided instead to sell 2 contracts with $300 spreads because I could generate more income selling two contracts at 578 and 575 than I could selling 1 contract at 578 and 572. And I probably should have recorded it this morning. I'm only managing 3 positions in this account, but they all have spreads that are uncomfortably large for me, and they are too close to the money. I'm not trading any gold, and I'm not trading any QQQ because I was trying to preserve my capital. And by increasing these spreads, my option buying power dropped to negative 24 cents. This column, BP effect, the buying power effect, just tells me how much of my capital is being used to secure these trades. So it's $2,700, and I had $2,699.76. And after I rolled out one of these positions, I was kind of surprised the platform did not block the trade. But anyway, I was 24 cents in the negative with no capital available to make any more trade repairs. So I broke my own rule and went to my credit union and transferred $300 into this account. So right now I have $999.76 in cash. It's going to need to settle before I can use it, but it does mean I'll have a little repair room if I need it. But I am really hoping that things are going to turn around in the market and these positions are going to either stay out of the money, these SPY positions, and that IWM will move out of the money. It's very close. I've got an upper strike of 217 here, and it's trading at 216.91 right now. So I'm optimistic about that, especially because I still have 11 days to expiration. I just wanted to show you the good, the bad, and the ugly with where things stand right now. And I would like to show you one of these rolls in real time where I increased to 2 contracts with narrower spreads rather than rolling out to a contract with a wider spread. And I'll keep you updated, and you can either let me be a cautionary tale or maybe I'll look brilliant.